Today we're talking all about Chinese stock market investments. It looks like China, it's about to go. So what I like about China right now is it's very quiet. Chinese stocks, no one is talking about them. Chinese stocks, they're really out of favor right now. So it's about 4 months ago, I posted on eToro that I thought Alibaba, I was calling it Alibaba the sleeping giant, and I thought it was ready to go. So I was actually wrong then. If we click on this to just check it out. So I'm not sure if you can see it on your screen, but it looked like this big downtrend that started in 2021, the beginning of 2021, going all the way to 2024. It looked like it had done that big breakout and it was going to start skyrocketing once it broke 125. Um, it was, I think, the end of the downtrend as that big red downtrending line was broken. So like a 2 week close above that, that's what you're looking for. We got it. Came back though and it tested the line and it went again. But now I think the accumulation is done for the next move higher. So the timing was a little bit off when I wrote this post, so it wasn't 100% correct. Overall, my timing wasn't the best. So if we look at it in the portfolio, you can see here, Baba. It's got 4.8% of the portfolio invested. Something to keep an eye on is on this side, which is the value. So let's just say I invested 4.08%, and now you can see the value is 3.48%. So that means it's underperformed the portfolio and it's turned into a smaller position. Whereas if we check here, say we're like Palantir, one of our best winners, we went long with 7.67% of the account. That grew by 382%, which means the value today is like a 20%, 20% of the portfolio is in Palantir. So that's like something like I see when people are checking the portfolio, they don't quite understand that. They're really focusing on the invested side where you actually have to look at both the invested and the value side. So you can see like which ones are outperforming. That's why I like eToro, because they do all this math for you. So, yeah, something to keep an eye on. Anyway, let's get back to what is happening today. So, when I made that post, it was over here. So I thought it was going to start just going, catch everybody by surprise, but we're back there again. So now we've attacked this level one. Oh, it actually goes back here. One time, two, three, four, and it's the fifth time. Whenever you create this ceiling like this and you're just punching at it, eventually it's going to get so weak and you're going to punch through. Once you break through this resistance level, this roof, eventually it should break and it turns into support and you should bounce on it. And you most likely, if it's a good stock, which I think Alibaba is a good stock, you never revisit it ever again, hopefully, if everything goes smoothly. So I think that's kind of like the narrative right now. I think these Chinese stocks, I got it wrong last time. I might get the timing wrong this time. But I held through all of that because fundamentally I believe in China. Fundamentally, I believe in these stocks. So the stocks that we have, let's just go back to the portfolio and check them out. The stocks that we have, let's go to the top. So Tencent is actually the biggest, 4.8%. And you can see again, the value is not 4.8% or greater. That means it is actually underperformed in this portfolio, even though it's up 40.94%. That's actually underperformed the portfolio. Next up is Baba, that we already spoke about. We keep going down. What's the next one? PDD. So this is 1.2%. It's shrunk to only 0.6% of the portfolio, PDD. I think PDD is quite fascinating. They do own Temu. So, not many people have heard of PDD, but they have heard of Temu. And then we have the electric vehicle company out of China, BYD. That was a 0.58% position. That one's actually going pretty well. So that is up 236%. And its value is 1% of the portfolio. So those are our Chinese stocks. Those are the best. I feel like those are kind of like the blue chips. If you want to invest in China, I don't really like the indices. I don't really like them. So I think there's a whole heap of garbage in there. It's not like the S&P 500. China doesn't have, a great diverse selection of highly performing companies. So I feel like you got to be very specific with investing in China. So anyway, if we take a look at this, these guys, I believe they're all big sleeping giants and they're about to wake up and they're about to go. So yeah, I just want to make this YouTube video to document this and be 100% transparent with you. So you can see, let's see if I turn out to be right or wrong. Let's see if the timing is right or wrong. Yeah, let's wait and see. Anyway, let's go to the next stock. This is Tencent. Let's zoom out with Tencent. Remember, this is my number one holdings. We used to call this one the chart of beauty because because it was just going insane. From its existence, 2007, it was a massive. I think back then, if you were to measure it in February 2021, it was over a 30% compounder, 32%, if I can remember correctly. But overall, remember when we're talking about it like simplicity, that's where you make your millions. Just focus on the green line. Come on, look at that. Look at that green line. It's held up until today, despite going through that downtrend, right? So they all all these stocks, they all had that downtrend here. Let's just draw it in nicely so we can see what we're looking at. I've already deleted it, but they all had this downtrending line, all these Chinese stocks. They all broke that, and now they're consolidating at the lows. So they're kind of going through this like bit of a head and shoulder ascending triangle accumulation sort of thing. This one's under the price of like 492, call it 500. So it's consolidating at that whole number of 500. I think once it breaks 500, 2 weeks above that roof, what's going to happen? Probably going to turn to support and you never see it ever again. Now, I do have a little line at the all-time high of 716. It's just a little line because I think it's a little roof. I don't believe it's that powerful. It's not as powerful as the big whole number of 500, halfway to 1,000. So I think you will probably explode up to that 700 level, consolidate a little bit, and then go again even further. And we'll start the big trend. And then when the market is up here near 1,000, I believe that's when you're going to hear all the positive news about China again. And everyone's going to get scared that China is taking over. So let's take notes with all of that. That is me thinking in advance, thinking like a chess player, 2 moves ahead, 3 moves ahead. I think that, like once this starts breaking out, you're going to hear a little bit of chatter. Once it breaks the all-time high, you can hear a lot of chatter. And that's what happens. What happens then? Everybody's going to be really, really happy, right? A lot of people are going to be buying in at this all-time high because they feel like they've missed it. Our buys are back in here, right? Our buys are down low and we're going to be in a very, very safe position. And we're just going to keep on holding and holding and holding. My mindset with this China stuff is, again, like how I'm thinking with the AI is insurance, but you get paid. Same thing with China. Like, obviously, there's a lot of risk with investing in China, right? It's definitely not the same as the US. But, the 2 superpowers of the world these days, it's the US first. It is China second, in my opinion. So I want to have a little bit of exposure. Because let's just say in the worst case, like not a worst case, in a scenario, right? It's a bit of a rare scenario, maybe that's a better word for it, that China does become number one. I'm not going to be stressing because I've got an allocation and that allocation is at a size in which I'm probably going to end up very wealthy if that happens, right? So I'm not going to get scared. So that's how I like to think with this stuff. Like, hey, if AI takes over the world, I'm probably going to end up very wealthy, most likely. All right. So, I'm not sure how it's going to affect my income. I'm not going to, I don't know that side of things. But that's why you got to be invested in this stuff. That's why you need to be diversified across many assets and think with that in mind. So, Tencent, it's pretty clear to me. You break the 500, you go higher. And just take in mind, like just think about it. Baba, same kind of looking chart. Big consolidation for multiple years near the lows. Tencent, same thing, all right? Big consolidation for multiple years at a key level. Looks like it's going to go. And then who's the leader right now? It is BYD. BYD has done that same consolidation for a very, very long time. And it has already broken out, right? It's already broken out. Let me just zoom out for you so you can see what's going on. Look at this. So this stock is a weird stock, and stocks have personalities. The personality of this stock is consolidate for ages. So boring, so boring, so boring. Boom. All of the gains is in a couple of months. So what's probably going to happen next time? Consolidate, 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 consolidate. All the gains in a few months. Now, if you missed those few months, you're out. You missed it, right? You're going to get stuck in the consolidation for most likely a long period of time again. Um, but yeah, seeing how BYD is already at all-time high. It has never been this high in the history of the stock. This means overall it is the strongest out of those three that we've spoken about so far. Alibaba, Tencent, BYD is number one. And then last on the list, this chart is of PDD. We're a little bit frozen here. Why have we frozen? All right, here we go. It's updating now. Sorry about that. But yeah, it's kind of similar. It's kind of halfway in between BYD, halfway in between Baba and Tencent. So it's pretty damn close to the highs. Got this little alarm here at 170. The all-time high is at 220. So throughout that whole level here, there is going to be a resistance. But same thing, you can kind of see what's happening. Consolidated, making this ascending triangle, head and shoulder kind of pattern. You know, everybody, they say they gospel these patterns, but all they are, they're just showing what's happening in the market. It's showing that there is an accumulation. Once we break out of all this stuff, then I think, we're not coming back for a pretty damn long time. And yeah, it's going to be very interesting to see what happens with these stocks. But you can see, like, based on the chart gives you hints before, everyone else enters into the market. So that's why I love technical analysis. Very simple. At a quick glance, within 3 seconds, if you're good at this, you can understand what's happening in the market and you can you can position yourself accordingly. So that's my thoughts on China. I think it's all eyes on BYD now. What happens with BYD is going to be a sign was most likely to follow with the other stocks. BYD is the market leader in China with the Chinese stocks. But yeah, I'm feeling very positive. I think something in the past where whenever I have made a mistake, let's say I thought, China was going to go 4 months ago and I turned out to be incorrect. Sometimes I was like, oh, just cut the loss because I'm incorrect. But then, no, you don't cut the loss because you're incorrect. You cut the loss if your thesis has been, proven wrong, right? If your thesis has been proven wrong, then you cut the loss. Right now, we're still at the highs. So it's like the odds that we go today is higher than when I made that post 4 months ago. So that's why I'm still holding, all right? So this is how I believe, obviously every investor has their own style, but this is how the smart investors make their moves, right? We're not thinking like day trading, we're thinking short term. Yeah, sometimes we make some short term moves. Sometimes we understand the market likes to move short term, but you got to have patience. And, by having the constraint of having multiple assets, 30 plus assets, it actually allows you to like think more long term because you don't need any of those ones to make you rich in the short term right now, right? Or imagine if you have like 50% of your portfolio in one stock, 50% of your net worth in one stock, and then that one stock goes down. You're going to want a revenge trade, right? You're going to want to make that money back as soon as possible because that one really hit your net worth really, really hard. So that's why I believe it's really important to diversify. But the important thing is don't diversify just for the sake of diversification. Make sure all of your stocks, you believe they are truly A-class stocks. They are A-class assets, which really, you honestly believe they have the ability to compound much higher than the S&P 500. Because if they don't compound more than the S&P 500, then what is the point? You may as well buy the S&P 500 itself and let the mathematical formula of the S&P 500, how it's self-cleaning, it removes the worst and puts in the best, based on math. You may as well join the S&P 500. So that's another quick little tip for you. All right, guys, we'll wrap it up there. Nice and easy for today. Let's see what happens. Am I wrong again? Is it going to move another 4 months from today, or am I going to get it right this time? Let's go. We've been hitting that pretty damn well on the head. Bit on a winning streak at the moment, but let's just say, like this thing can reverse. This sometimes when you get a breakout like this, it doesn't mean the breakout has to work. A breakout, when it's a clear breakout of a multi-year move, so it's a multi-year resistance level. When it breaks out clearly like this, the odds are still only 70% chance that it follows through. So keep that in mind. There's still a 30% chance that I'm going to be wrong here. Yeah. Anyway, that's it. I'll see you in the next one. Thank you very much.